Imagine this. It's a quiet Wednesday morning in January 2026. You pour your coffee, you sit down at the kitchen table, you open your banking app, expecting to finally see that Social Security raise you've been hearing about on the news for months. The government promised you a 2.8% cost of living increase. You did the math in your head. You were counting on that extra money to help with rising grocery bills, your electric bill, your prescriptions. But when you check the deposit, your heart sinks. The raise is barely there. In some cases, the check looks almost exactly the same as December. For some seniors, it actually looks smaller. You sit there confused, angry, a little scared. You wonder, did I do something wrong? Did Social Security make a mistake? Where did my raise go? And here's the painful truth. You did nothing wrong. The money was quietly taken before it ever reached your account. And almost no one in the mainstream news is explaining exactly how it happened. My name is Masha. I'm a senior policy analyst. And on this channel, TaxWise Seniors, I help retirees just like you understand the complicated rules that decide how much money lands in your bank account every month. Today, I'm going to walk you through exactly what's happening with your 2026 Social Security check. I'll show you the real numbers from the Social Security Administration and Medicare.gov. I'll explain the hidden Part B premium hike that's eating your raise, and I'll give you 3 specific steps you can take this week to protect every dollar you're entitled to. And please, stay with me until the very end, because there's one mistake I see seniors make every single year around this time. It's a quiet mistake. It's a mistake that can cost you over $900 in 2026 alone, and most people don't even know they're making it until it's too late. So pour your coffee, get comfortable, let's talk. Let me tell you about Robert. Robert is 67 years old. He worked for 38 years as a maintenance supervisor at a hospital in Ohio. He retired 2 years ago. He's a careful man. He balances his checkbook by hand. He reads the news. He thought he understood how Social Security worked. Last October, Robert heard the announcement. Social Security would be giving a 2.8% raise starting in January 2026. Robert did the math. His monthly benefit was about $2,015. A 2.8% raise would mean about $56 extra a month. Over a year, that's almost $700. To Robert, that was a tank of heating oil, or 3 months of his supplemental insurance, or a small Christmas gift for each of his grandchildren. So Robert planned ahead. He told his wife. He even called his daughter and said, "We'll have a little more breathing room next year." Then January came. Robert opened his account. His deposit had only gone up by about $38, not $56. $18 of his raise had vanished. He thought it was a banking error. He called Social Security. He waited on hold for an hour and 40 minutes. When the agent finally answered, she explained it to him in one sentence. "Sir, your Medicare Part B premium went up this year. That increase was automatically deducted from your check before you got it." Robert was stunned. Nobody had told him clearly. The headline said 2.8% raise. Nobody said, but Medicare is taking a chunk of it first. And here's the part that hurt Robert the most. He also made one small additional mistake the year before that pushed him into a higher Medicare premium bracket altogether. We'll come back to that in just a few minutes. Because if you've sold a house, done a Roth conversion, or taken a large IRA withdrawal in 2024, this part is critical for you. But first, let me explain exactly what's happening behind the scenes. Here's the truth, straight from the official sources. On October 24, 2025, the Social Security Administration announced the 2026 cost of living adjustment. The COLA is 2.8%. This applies to nearly 71 million Americans receiving Social Security or supplemental security income. For the average retired worker, the monthly check goes from $2,015 to $2,071. That's a gross raise of about $56 a month. So far, so good. That sounds like a real raise. But here is what the headlines did not tell you. On the same announcement cycle, Medicare published its own numbers in the official 2026 Medicare Costs Fact Sheet. The standard Medicare Part B premium, that's the part of Medicare that covers your doctor visits and outpatient care. is jumping from $185 a month to $202.90 a month. That's an increase of $17.90 every single month. In percentage terms, that's roughly a 9.7% jump, almost 10%. Compare that to your 2.8% raise. The Medicare increase is more than 3 times bigger. And here's the part most seniors don't realize. Under federal law, specifically Section 1840 of the Social Security Act, your Medicare Part B premium is automatically deducted from your Social Security check before the money ever hits your bank account. You don't get to opt out. You don't get a bill. The math is done in Baltimore, and what arrives in your account is the net. So let's redo Robert's math the way the government actually does it. Robert's gross raise, $56, minus the Part B premium increase, $17.90. Robert's real raise, about $38.10 a month. The Part B premium hike alone eats roughly 32% of the average senior's raise, and it gets worse for lower-income seniors. If your monthly benefit is under about $1,000, the Part B increase can wipe out 50% or more of your entire COLA. Now add the Part D drug plan factor. The Medicare 2026 fact sheet lists the national base Part D premium at $38.99. But many standalone drug plans are raising their premiums sharply for 2026. According to AARP and public plan filings, some plans are nearly doubling, going from around $41 to $91 a month. That's an additional $50 taken from your budget every month if you happen to be enrolled in one of those plans. And here's the painful kicker. Part D premium increases are not protected by the hold harmless rule. None of them. Even if your Social Security check would technically be smaller because of the Part D hike, the government does not protect you from that. Many of you are watching this and thinking, wait, isn't there a hold harmless law that protects me? Yes, there is. It's a real law. Section 1840(b)(2) of the Social Security Act. It says your net Social Security check cannot go down year over year just because of a Part B premium increase. But here's the trap. AARP has confirmed clearly. Because the 2.8% COLA for 2026 is larger than the $17.90 Part B increase for most people, hold harmless will not apply to most Part B enrollees in 2026. It only kicks in when the Part B increase is bigger than your dollar COLA increase. For most retirees this year, that math does not trigger the protection. So the protection exists. It's real. But for most seniors in 2026, it does not save you. Now let's talk about Robert's other mistake. This is the hidden trap I promised you at the beginning. Please listen carefully. In 2024, Robert sold a small rental property he had owned for 20 years. He made a nice profit. He paid his taxes. He thought the matter was closed. What Robert did not know is this. Medicare looks at your tax return from 2 years ago to decide what you pay for Part B and Part D today. So in 2026, Medicare is looking at Robert's 2024 tax return. That capital gain pushed his modified adjusted gross income above $109,000 for the year, and the moment a single filer crosses $109,000, the standard $202.90 premium does not apply anymore. Instead, Robert moved into the second IRMAA bracket. His new Part B premium for all of 2026 is $284.10 a month. That's $81.20 more every month for 12 months. Over the year, that one-time property sale is costing Robert $974.40 in extra Medicare premiums. For couples both on Medicare, double it. That's nearly $2,000 a year. And the brackets climb fast. Above $137,000, $405.80. Above $171,000, $527.50. At the very top, above $500,000 single, you're looking at $689.90 a month just for Part B. This is what's called the IRMAA cliff, and it catches thousands of seniors every year because of one-time events. A home sale, a Roth conversion, a big required minimum distribution, an inherited IRA, an annuity payout. If this is you, please do not just accept the bill. there is a legal protection most seniors have never heard of. It's called Form SSA-44. It's officially titled Medicare Income-Related Monthly Adjustment Amount, Life-Changing Event. If your higher income in 2024 was caused by a qualifying life event, and that list includes retirement, work stoppage, work reduction, marriage, divorce, death of a spouse, loss of pension income, loss of income-producing property, or an employer settlement payment, you can file Form SSA-44 and ask Social Security to recalculate your IRMAA based on your real current income, not your 2024 income. If you qualify and you file it, you can save hundreds, sometimes thousands of dollars in 2026 alone. If you do not file it, you are stuck with the higher premium for the entire calendar year. That is the mistake I see seniors make every single year. They get the IRMAA letter. They sigh. They assume there's nothing they can do. And they quietly pay an extra $1,000 or $2,000 they didn't have to pay. So let's talk about what to do, right now, this week. 3 specific steps. Step 1. Verify your 2026 benefit amount directly through your official My Social Security account at SSA.gov. Do not rely on the news. Do not rely on what a friend told you. Log in. Look at your December COLA notice. It will show you your gross 2026 benefit, the Part B premium being deducted, and your net deposit amount. If anything looks wrong, you'll catch it before January. Step 2. Review your Medicare Part D drug plan before December 7th. Even if you've already missed open enrollment for this year, mark your calendar for next October. Open enrollment runs every year from October 15th through December 7th. This is your legally protected window to switch Part D plans or Medicare Advantage plans. If your drug plan premium is doubling in 2026, you may be able to switch to a cheaper plan that covers the same medications. Use the Plan Finder tool at Medicare.gov. It is free. It compares every plan in your zip code. Step 3. If you had a one-time income spike in 2024, file Form SSA-44 immediately. You can download it directly from SSA.gov. Fill it out. Attach proof of your life-changing event. Mail it or take it in person to your local Social Security office. Keep a copy for your records. And while you're at it, if your income is on the lower end, ask about Medicare Savings Programs, the QMB, SLMB, and QI programs, which can pay your Part B premium entirely. And ask about extra help for Part D if your income is under 150% of the federal poverty level. 3 steps: verify, review, file. That's how you protect your money in 2026. Before you go, I need to say something important. The rules around Social Security, Medicare, and IRMAA change every single year, sometimes twice a year. The brackets shift, the premiums climb, the forms get updated, and the government does not send you a personalized letter explaining every change. Please do not rely only on YouTube notifications to keep you informed. YouTube's algorithm decides what you see, not me, and not you. Important videos can disappear from your feed without warning. So here is what I'm asking you to do. If this video helped you understand even one thing about your 2026 check, please subscribe to TaxWise Seniors and turn on the bell notification. Leave a comment below telling me whether your January deposit matched what you expected. Your story helps other seniors in the comments who are scared and looking for answers. And share this video with one friend, one neighbor, one family member who is on Social Security or Medicare. One share could save them $1,000 next year. I read the comments. I take your questions seriously. And next week, I'll be breaking down the 2026 IRMAA appeal process step by step. Exactly how to fill out Form SSA-44, what proof to attach, and what to do if Social Security denies your first request. You worked your whole life for this money. Don't let a quiet rule buried in a fact sheet take more from you than the law actually allows. I'm Masha. This is TaxWise Seniors. Take care of yourself, take care of your spouse, and I'll see you in the next video.